What's happening, world? This is Jabari Long with another episode of the Long Report. Be sure to like, share, and subscribe to our channel. Very excited about today's show. Got Mr. Jeff Taylor. How you doing today, Jeff?
I'm a blessed man talking to a blessed man.
Absolutely. and I love the topic of the show. You, the wealth architect.
Yes, sir.
Tell
Yes,
us
sir.
about that, man. You've
Yes,
been
sir.
doing this business for over
Yeah.
36 years.
Yeah.
What actually do you do?
I am a life insurance agent with specialized skills in cash flow and asset protection management. That's kind of like my specialty. And I work with business owners, real estate investors, property owners, and I've got about 10 different niches that I branched into where I serve various needs. For example, we have a module called Divorce Recovery, where we teach people who've gone through divorce, how do you recover from that financially and build a seven-figure cash reserve. Folks who have kids in private school, we teach parents who are paying for private school, how do you pay for private school and recapture 100% of what you pay and again build a seven-figure cash reserve. So we teach how do you pay zero for private school. That rolls into college. We teach how do you pay, same concept.
Same concept,
For
yeah.
parents who are paying or will have to pay, how do they pay for college and pay zero for college? So we've got a couple of different modules that we teach that I've developed over my career that focuses on problem solving.
Okay, I'm really excited. I love these financial strategies. We were talking just before the show started, and then you touched upon something big here, divorce, which is, man, it wipes people out.
It does. It does.
Primarily the guys, right?
Well, it can go either way. It can go either way, especially when you have two six-figure professionals. Okay. And unfortunately, people get divorced, but they don't know how to get divorced financially. Mm-hmm. There's a whole nother conversation. One needs to say, okay, y'all, it's not going to work. Okay. All right. It's not a question of how do you divide it. The question is, how do you position yourself to build, again, a seven-figure cash reserve despite getting a divorce? How do I protect myself from the decisions that I've been making before I've even gotten divorced that have been working against me? And I'm holding back because I want to wait on something. But the point being made is that, as Hosea 4:6 says, that my people are destroyed for two reasons: for lack of knowledge and the rejection of knowledge. So as a wealth architect, my role is in providing problem solving that focuses on how do we make wise, informed decisions. Because the problem, whatever we perceive it to be, is not the problem, right? For example, we're going to talk a little bit about real estate and so forth. When a person is considering buying a property, right? Mm-hmm. For example, I was at an open house talking with a realtor. I do realtor coaching on the weekends. And we were talking about the open house. The property was selling for maybe about $500,000. And at a 6.5% interest rate, the person who buys that property is going to pay 2.5 times the cost of that property. So in that case, they're going to pay out over $700,000 in interest.
Over the life of that loan.
Over the life of that loan, okay? So I'm talking with the realtor and I'm explaining to him that what we teach is how do you reverse engineer that, help the buyer get that property, pay it off in as little as 7 years. And again, how do you build a seven-figure cash reserve from that property, regardless of market appreciation and without a need of a tenant? Okay. How do you do that?
So you tell us, Jeff, that's one of the strategies, paying off property in 7 years or less.
Yes.
This is a great segue into that. How do you do that? Because I want to know. I've been investing in real estate for over 25 years.
Yes.
And I still haven't figured it out.
Okay. You know what? And it's not your fault, right? Because you've been in the game for 25 years. That tells you that you're brilliant, that you're smart, that you know what you're doing, to have lasted this long. The problem is this. We have two ways of addressing a financial problem. We are either the borrower or we are either the banker. One of the two. There is no in between. I'm either making financial decisions with a banker's mindset, or I am making decisions
with a consumer mindset.
Well, see, now the borrower is different than a consumer. See, now you getting ready. You trying to take me, trying to make me, I'm trying to stay focused. And the reason why, because I can be a consumer and not a borrower. Okay? A borrower is a person who believes that I need the bank in order to live the quality of life that I want to live.
Okay.
That's the borrower. Okay? The banker says, every financial decision that I make, I want to create 10 different financial miracles. Okay? The number one miracle I want to create, because the banker mindset says that I will always position myself to never lose money. Okay? Now, I don't know where you want me to go, but I can keep going. Rule number 2, again, we're talking about the banker's mindset. Rule number 2 says, I will always make decisions to never lose money. Okay?
So never lose money, and then always make decisions to never lose money.
Well, to never lose money and to never run out of money.
Okay.
Okay? I'm sorry, I said that wrong. Number 2 is to position ourselves to never run out of money. And the reason why we use the word positioning, because we're talking about a mindset that is evolving over time where I get better at being a banker in my decision making. Okay? Rule number 3 is, how do we position ourselves so when things go wrong, when things go bad, when the economy shifts or something is taken from me, how do I position myself so that I'm protected and I can thrive even more from that position? How do I position myself? Again, the banker's mindset. And number 4 is, anytime I buy something, how do I create interest from it? Excuse me, first of all, how do I recapture the cost from that expense? Let me make a correction here. How do I recapture the cost of that expense? A car, this building we're in, all of this equipment, right? How do I recapture my costs? And then how do I create interest from it for the rest of my life and my children's lives and my children's lives? Secondly, how do I create cash flow from that expense for the rest of my life?
I want all the answers to those questions, Jeff.
Now remember, I'm just an insurance agent, right?
Don't say just. Now is not the time to be modest. You're a wealth architect using insurance as a base or a pivot, right?
Yes.
To accomplish a lot of different goals.
Yes. And so why do I teach the way that I teach? What's in the Bible? So if we run to Deuteronomy, we'll see where it says that if you follow my instructions or the blessings that I've laid out for you, it leads from a position where you become the lender and not the borrower. It's talking about banker mindset, talking about an economic system. We see that system, the actual revealing of that system in Genesis 41. Now, I know y'all didn't call me here for Bible study, but I get a little excited about this.
We could definitely do the crossover, right?
I get a little excited about this. But we see where Joseph has been called to interpret a dream. Okay? Where the mayor of the city, if you will, or the senator of the government is having nightmares. And he can't sleep. And someone says, well, Joseph, it's this dude in prison. He runs to jail. He interprets dreams. Somebody said, go get Joseph. Joseph shows up, and he gives the interpretation. The senator gives the Pharaoh gives the interpretation of the dream, and immediately Joseph lays out a business blueprint. And the king doesn't know that there's a famine coming, a serious famine coming, okay? And what this dream does, it lays out a blueprint to not only thrive, not survive, but thrive through the famine, but it also positions Egypt to become next level superpower. All from Joseph's interpretation and business savvy. So Joseph explains this, and what he's laying out is the banker's mindset.
Okay.
He's laying out the banker's mindset. How do you position yourself for a famine? Thrive through it and go to next level wealth creation. So I have a system that I am in the process of share a little secret. I probably shouldn't tell it out loud. Tell a little secret. We are going to rename what we're doing called 10X Plus.
Okay.
Why? Because when you buy a property, when I ask people, what's the purpose of you buying this property? As an investor, what's the purpose of you buying a property?
Equity.
Equity, okay.
Build equity, cash flow.
Cash flow, okay.
Some tax benefits.
Tax benefits, okay.
As well as, mortgage pay down, basically increasing my net worth.
Okay. Again, all of the answers that come from a brilliant mind who studied his craft. You know what you're getting into, right?
Yeah.
But the banker's mindset thinks differently. The banker's mindset says that I want to buy a property and I want to 10X plus the profit from it, regardless of appreciation and regardless of a tenant. So regardless if I'm buying this property for myself or if I'm an investor who's going to put tenants in this property and I want to create cash flow like that. Regardless of what you want to do, the banker says, I'm going to 10X this property regardless of a tenant and regardless of appreciation, right? So let me run back to something. We talked about the 10 miracles of money. And what Joseph lays out is the expression of the 10 miracles of money. Rule number 1 is we want the property to be protected from losses. When you buy a property, you build equity into that property. Is that equity locked in?
No.
It's not locked in. The banker says, "No, I'm going to lock that in." So when we close on a property, right? We typically get a loan. What does the bank do? The bank locks in the value of that property and puts a loan on it. They lock it in.
By creating that mortgage?
By creating that mortgage. Okay? It's thinking it's going to 10X plus its wealth creation from property equity value. Now, as an investor, investors haven't been trained on this. They haven't been taught from this perspective because we have been taught that you make money from the property taxes, different tax strategies, cash flow from the tenant, and so forth. The banker says, I don't care nothing about none of that. I'm going to 10X plus my profits from this property. And so I'm going to, number one, I'm going to protect it. Okay, I'm going to lock in that value. Has the investor locked in their value? No. Because when you're creating equity and your property values fall, what happens?
Yeah, you
your
lose.
Equity is gone too.
Correct.
Okay, borrower's mindset. The borrower's mindset doesn't know I got to protect myself. Because rule number 1 is what? Position myself to never
lose money.
Lose money.
Yeah.
Right? So I've got to lock that equity in.
So how do you lock the equity in, Jeff? I'm down to know.
Okay, so property equity is an entity to itself. It has to be managed just like real estate. I mean, just like the bank manages their property. Again, the bank is the model. See, people think the bank is a bad guy. No, the bank is the teacher.
Can't beat them, join them, right?
Uh-huh. The bank is the teacher, right? So we want to lock in that property equity value, and we want to follow the 10 miracles of money that's been laid out in the scriptures when we buy a property. So you say, well, how do we do that? Well, okay, so we want to lock it in, number one. Number two, we want to create liquidity. Okay? So in the course of how you're handling your real estate, are you intentionally creating liquidity?
Sometimes.
Okay, sometimes. Okay. Yeah. How do we then consistently create liquidity where we say that my intent is to double my equity position by a specific target date, and then repeat it over and over and over and over again? How do I do that? Okay. Third thing I want to do, let me just go through the miracles of money. Third thing I want to do is I want to create interest. Right now, with all the equity you have, how much interest are you creating on your equity?
I don't know.
Okay. So we want to see how much interest that can be created. What we found in our case studies, watch this, for every $100,000 of property that you own, you are forfeiting $10,000 to $100,000 per year in wealth creation. Why? Because I'm not managing my property equity value. I'm just letting it sit. So then I have investors tell me, yeah, but I take my equity and I roll into another property. I say, great, fantastic. Let me go back to my original question. How much interest are you creating on your property equity value? Rolling that equity into another entity, such as real estate, does not create interest like the bank is getting. How does the bank get interest from property equity value?
So we talking about paper? We talking about...
We're talking about interest that shows up in your account every month. That's what we're talking about. How does the bank create interest in its account?
They create notes. They create debt.
They create debt. So where does that money come from?
They just create it out of thin air.
But when a mortgage is taken out, where does the bank get its payments from?
The borrower.
The borrower. Interesting. So we have been trained and taught to be who?
The borrower.
Isn't that interesting? Yeah. How come we're not the banker? How come we're not making payments to ourselves versus to the bank? Because we don't know how to create liquidity and we don't know how to create interest from property equity value.
And so are you talking about maintaining ownership in that? Or are you talking about selling on, say, a land contract where you would become the bank and then that land contract buyer would be paying interest payments monthly to you?
Okay. So you want to have that conversation. Okay. All right. So now you are the hard money lender. Can we create a scenario like that? Is that okay. I'm the hard money lender. Okay. Where do you keep your money? Where do you, Mr. Hard Money Lender, where do you keep your money? Because you got to keep it somewhere.
So typically in the scenario that I utilize, I'm borrowing the money.
You're borrowing the money.
And then I'm basically marketing up and selling that same money. So I borrow at 6.
Oh, my God.
I sell at 8. And then at 2% arbitrage, I keep.
Right. That's, you know what? That's a brilliant idea. But I'm still in borrower's position, even with the brilliance of that idea. Why? Because I'm not creating interest from the rest of my life. I must, every financial decision that I make, I must create interest for the rest of my life. I want to ultimately think like the bank, and I want to create uninterrupted interest on everything I touch.
So we're talking about the term infinite banking?
See, I love my infinite banking brethren. I love them. I celebrate them, but I want to take it to a higher level. And here's the reason why. My infinite banking brethren and sisters, they are brilliant. They have people's best interests at heart. They are wonderful people. They're doing a great job. But here's the challenge that you have. They use whole life. Okay. Now I'm gonna get some letters on this. Get some letters on this. Okay, I'm gonna get some letters. But here is the challenge with whole life. We use Index Universal Life. I've been using Index Universal Life since it came out. As a matter of fact, when Index Universal Life came out, I was a registered investment advisor. And I'll share that story later. Maybe we'll have time to come back to it. Whole life is the great-grandfather of Index Universal Life. That's how we have to see it, because that's what it is. It's the great-grandson of whole life. So when we comparing these two tools, we got to make sure we understand the differences. And there are two fundamental differences. That doesn't make whole life bad. That's not what we're saying. We're just saying the way granddaddy did things is going to be different than the great-grandson. Okay?
Yeah. Evolution, right?
Right. The product has evolved. Mm-hmm. And Lord only knows what's getting ready to come out with this crypto and everything else and how the insurance community is going to respond. Who knows what's going to happen? Mm-hmm. But here's the point. We have flexibility, which you definitely need when you're working in managing property equity value. You got to have flexibility. Secondly, what Index Universal Life provides is stock market gains without stock market losses. Whole life just doesn't provide that.
So you got to ride the elevator up and down.
Well, not with Index Universal Life. See, now you're talking about if Index Universal Life is the great-grandson, the great-grandson is variable life, where you do ride the ups and downs. You are in the stock market, okay? But the great-great-grandson says, no, we're going to get the gain, but we're not going to participate in the loss. Right. Two fundamental differences. So we love our infinite banking brethren, but we just teach it differently. That's all.
Using IUL.
Using IUL versus whole life. Okay. And those are the two fundamental differences and the reason why we use Index Universal Life.
Yeah.
So
it's a term that I heard nomenclature, right? As it relates to different industries.
Yes.
So you have all these different products and so much minutia mixed in, and then insurance agencies, financial representatives, people selling different products, maybe because of how they get compensated, or maybe they're ignorant to how all the other products work.
Yeah.
But I've intense discussions about you should not bundle investment with life insurance.
That's interesting.
By term and invest the rest separately.
That's interesting.
So it's a lot of different theories out here as it relates to that. Yeah. And, we talk about it a lot, just with our people. We just want them to get insured, right? So we're not relying upon the GoFundMe account.
Right.
But this is definitely a
next level.
Yeah, definitely a next level course as it relates to setting yourself up and your family up for the future.
Yeah. So let's roll this in, because we done touched on a few things. We're talking about the banker's mindset. See, does anyone make more money than the bank?
No.
Interesting.
No, and they got the least amount of risk associated with their investments.
You know what? Now see, I'm about to put this mic down, walk up out here. We done. We finished. We don't need to talk about nothing else. Exactly.
I always tell people when they get a bunch of money, I said, as far as opening up this business, opening up that business, what you need to do is open up a lending business and then make everybody else do the work. See, the banker, they sit back and they just deploy capital. And everybody who gets it has to make the interest back before they make any money on the money, right?
Exactly. So, okay, so we were talking about hard money lender. Where do you keep your money at? Okay. The beauty of using life insurance, again, what is the purpose of life insurance? The purpose of life insurance is to protect our present and future cash flow and assets. Well, what's rule number one? Rule number one is never lose money. Lock in your equity. Well, that's the purpose of a death benefit, because we're all going to pass away, right? When that person passes away, where you have some kind of financial, there's going to be a financial impact on you from that loss, insurance protects you, cash flow and assets for the rest of your life. So that's what the role of the death benefit. Then we have interest. We have cash flow. We have cash reserves, profit, velocity of money, recycling and recapturing. So we want all of these entities working for us at the same time. So let me make these 2 points before I lose them. One, if I am going to be the banker, every decision that I make, it must be positioned to create interest for the rest of my life, okay? Secondly, I want that interest to create cash reserves. I want that cash reserves to create cash flow. So the producer of this show has these various media platforms where you can put different advertising on his platforms. Right? He was telling me how much it costs. I don't know how he's financing it, but if he used his life insurance to finance his business, regardless of how many sales he makes, when his loans are properly structured within the policy, he will always create interest, cash reserves, cash flow, profit, velocity of money, and he'll be positioned to recycle and recapture, regardless of whether or not he makes a sale. For the investor who wants to take equity out of their property to buy another property, of course you're going to make a whole lot of money doing that when it's done correctly. But you're still forfeiting what? The mechanics of banking. You're still forfeiting what? Interest, cash reserves, cash flow, profit, velocity of money, recycling and capturing. I want my property equity value to do 2 things. Number one, I want to create it. Just like growing a garden, I want to create equity in that property. How do I do that? I'm going to need some software. Uh-oh, we're getting technical now. We're going to need some software. When we take out a mortgage, we get a copy of what? What do we get a copy of when we take out a mortgage?
Closing docs, the mortgage.
The mortgage.
The note.
And the note. And what is that called? What is a document? What is that? What kind of table is that called?
This amortization
It's an amortization table. Yeah. What is the purpose of the amortization? Why do they give you an amortization table? So the bank can show you how much money they're making.
100%. They got to disclose.
They got to disclose it. Now, when you look at that amortization table, you can clearly see that you're going to pay 2.5 times more than your original balance. Okay? How much of that money goes to you?
None of it.
Absolutely none of it. Now, somebody would argue, but you do get the principle. Okay, we'll table that class for another day, okay? But we're not getting interest. We're not getting uninterrupted compounding. The bank is getting all the money. So how is that amortization table created? It's created with software. That software takes that loan and it creates an amortization table that gives profit to who? To the bank. The bank is the smartest dude at the table, okay?
Yeah, 100%.
Exactly. So how do I then adapt that same mentality? I need software to reverse engineer that. Well, guess what? I have software, and it reverse engineers all debt. So when I'm coaching with a realtor at an open house, I'm showing that realtor how that particular buyer can buy that property, pay it off in as little as 7 years, because I'm using the same tools that the bank is using, but it's to the advantage of who?
The borrower.
The buyer. The buyer or the borrower, right? Mm-hmm. Exactly. So we want to teach banking mindset to the buyer. Why? Because I want to manage that property equity value. I was looking at some numbers. I ran an analysis, and it showed how in 1 year, a person canceled $100,000 of debt. No extra payments, no hurting the budget, simply by following what the software says. What is the software doing? It's doing the same thing that the bank is doing, but it's reverse engineering it
to benefit
me, right?
Yeah.
So what does that do? That reduces the debt against the principal, and it creates cash flow. Then what do I want to do next? Now listen, do not follow this without professional guidance. Let me say that out loud, because I can see some of y'all gonna try to do this and try to usurp the system. You know, everybody wants to do DIY. Then they call me 6 months later. Can you get me out this situation? I know I tried to do it without you.
They gonna put together an Excel spreadsheet and try to put the formulas in there.
Oh Lord. Well, my cousin told me. Oh Lord, please let's stop. Let's stop. You know what? The king, if we go again, I'm referencing the Bible. The king went to someone who had specialized skills.
That part.
He was an interpreter of dreams and a business development expert. He was a multi-talented.
Joseph.
Thank you. That's what you need to be handling your money.
And at the time, he was in prison, right?
Oh my goodness! See, now see, you're trying to see. I'm trying to keep us focused.
I got a good friend of mine whose name is Joseph, so you know we flesh it out so much in these conversations.
You know what? Now see, you know what? Now what the Bible is just a little lesson within the lesson. The Bible is telling us that people can make mistakes, and in Joseph's case, he was falsely accused. He was a convicted felon, and nevertheless had the talent and the gifting to save a nation.
Wow.
You can't tell me that ain't shouting. That's shouting talk right there. And we all have it. We all have it. This is the reason why when the Bible talks about that our gifts will make room for us and bring us before great people, the Bible is telling us you don't have an unemployment problem. You got a lack of skill problem. And when you work on your skills and you become a problem solver, all of a sudden somebody gonna knock on your door and say, hey, can you help a brother out? Can you help a sister out? And when you come and you have the solution to their problem, all of a sudden your bank account changes. Now that's extra. That was a bonus. That was a bonus conversation. That was extra. We didn't even charge for that one.
What we're paid is in direct proportion to the type of problems that we're willing to solve
Jabari,
for people.
come on now.
Right?
Come on now. And so people ask me, so when I do a presentation, and I forgot, I bring the books with me that I've learned from over the years, stack about maybe 3 feet high, right? Because I'm showing you that when you ask me for my counsel, this is what I'm referencing. Right. All of this material, right? This is what you're getting. So you can go and read all this book. Go ahead. Take 36 years and go and read it yourself, right? In light of the software I was referencing, the realtor said to me, well, I went on AI and I did it. And I said, fantastic. I said, so are you saying that you've mapped out a process to pay off your debt faster? Well, all you got to do is put your information in, and it tells you what to do, and it gives you a guaranteed payoff period. He said, no, I ain't got that far. I said, okay, well, this software has done that. It does that. I love when I'm sitting down with a person who owns a property, okay, an investor or a person who's getting ready to get their next property. Because what happens when we're in the process of buying a property, we have other things in life going on, right?
Yeah, 100%.
So one of the things that I ask people is, how's your retirement plan? Are you happy? You think you're going to have enough? What do you think most people say?
No, absolutely not.
They say
I'm gonna have to work until I'm 80. I saw a post yesterday. They said most Americans are working up until they're 80.
Oh my gosh, this is true. This is true, and not because they want to, right?
Yeah.
So there's several questions that I go through, and what I'm trying to find out is what else is going on. So you may have a person considering buying a property who's just recovering from a divorce. They qualify for the property. They want the property, but they got to deal with all these other issues. So what we do is we attack the whole deal. We want to show you how do you get that property and deal with all those situations. Let's get this property paid off in as little as 7 years without extra payments. Can I say that one more time?
Yeah.
Without
extra payments.
So I'm reviewing the case design. I see in one of the years they wipe out $100,000 without extra payments.
$100,000 worth of debt off their mortgage. 1 year.
I would love to run some numbers for you, brother. Let me show you. Okay? See, what I loved about Joseph said, let me show you. See, the folks who are you getting advice from, if they do not have case design, if they do not have material facts, if they don't have historical record, you need to deal with somebody because everybody can talk, right? Everybody can pull up something online. You need to deal with people who can show it to you step by step, right? So that's what we want to be looking at. How do we think like the banker? So fundamentally, this is what I want to do. You see how many, whatever questions that comes from this. Number one, I want to teach you how to use the banker's mindset. That, for example, if that mortgage is $500,000 and you're going to pay another $750 in interest, so you're going to pay over $1 million for that property. I want to teach you how do you build a $3 million cash reserve, pay that property off in as little as 7 years and keep your budget the same.
So I'm gonna buy a $500,000 house.
Yes.
I'm gonna get a 30-year mortgage, and over the length of that mortgage, I'm gonna pay 1.25 for the house.
You're gonna pay one, and we're gonna show it to you.
And then you're going to show me how I can have a $3 million
cash reserve. Yes.
Pay the house off in 7 years or less.
Yeah, somewhere up in there.
Somewhere. Oh man.
And keep your budget the same.
And keep my budget the same, so I don't need to make any more money.
Let me tell you something. We're gonna teach you how to think like the banker. Okay.
Is this legal, Jeff?
Well, see again. Okay, all right. So let me step back because you just said something. Again, why do we teach this? Because this is how the bank does it, right? It's in the Bible, but we ain't following the Bible when we make financial decisions.
No, we're not.
You know, I love teaching tithers and people who give to church. How do you give and double your net worth at the same time? See, we don't know how to follow biblical principle when we make financial decisions. And I promise you, a budget is not enough. You've got to learn how to create what? The 10 miracles of money. I've got to think like the bank. And rule number one is what, Jabari?
Never lose money.
Never lose money.
Yeah. I heard Warren Buffett say that.
Isn't that interesting?
Never lose money.
Isn't that
was
interesting?
number one thing.
And that's what Joseph said. Joseph said, never lose money. And then position ourselves to what? Never run out
of money.
And real estate investors are notorious for what?
Running out of money. Yeah, it's an illiquid asset. They tell us, right? At least I used to think that before today. Now, I'm going to make sure I get some counsel after this show just to let America know. Because you started off with we perish because of lack of information.
And the rejection of it.
Mm-hmm. So I tell people all the time, educate me. I want to learn. Mm-hmm. So I'm gonna definitely be reaching out subsequently to get some of this good game.
I would love to.
Everything you said is is turning me on.
So we want to, as you being an investor, and again, I need to learn a little bit more about what you're trying to do. I want to teach you how do you double your empire to the degree where each property is designed to be paid off in as little as 7 years. And we're going to create a 7-year cash reserve from that property, from that one property. And then we want to duplicate that on what? Every other properties that you have. See, I teach a contrarian gospel to real estate investors. The real estate investor is taught you make more money by the number of what?
Properties.
Or doors, right? The banker says, no. I create more money by doubling my property equity value repeatedly. That's how I make more money, right? Bank don't care about the number of doors. It cares to the degree of the size of loan that you're going to get. But at the end of the day, the bank is going to double the property equity value repeatedly over and over and over again. Why am I, as the investor, not doing the same thing? To depend.
Property equity value.
Yes, property equity value management is the key piece that real estate investors are losing. Again, for every $100,000 of property that you own, I can clearly show you that you are forfeiting $10,000 to $100,000 a year for every $100,000 of property that you own.
So the 10 to 100,000, why is it that range, Jeff?
Because it depends on the size of your loan.
Okay.
Size of, thank you. So the banker, the larger the loan, the more money the bank makes. For the investor, the larger the loan, the less money the investor makes. Why? Because they got to pay what?
The loan, the debt service.
They got to pay the mortgage. So until the investors, in my opinion, of course, you're going to put tenants in and all that. We're not discounting that. But we are saying that your highest priority must be to recreate that mortgage so that you are paying you and not the bank.
So there's a term that I heard of in these real estate spaces called hypothecation. Is what you're talking about doing and creating, does that have anything to do with hypothecation?
All we're doing is reverse engineering a mortgage and creating arbitrage. When we talk about recycling and velocity of money, we're talking about duplicating that over and over. Velocity means I'm doing it again.
Fast, yeah.
I'm doing it again, doing it again. So for example, got a client, he just has his home, but he had $40,000 in credit card debt. Okay. We took a HELOC, we took $100,000 from his home, put it into the policy. We took $40,000 out of the policy, okay, to pay off his credit cards. Now, why did we do that? Because he was paying over $1,000 a month to the credit card companies. Do you know how expensive that is?
And probably 25 to 35% interest.
Oh
on
my
each
God!
card.
Thank you. Now we're getting into recapturing, right?
Yeah, he's saving almost 20%. But
So he's now paying himself that payment, while at the same time creating interest, cash reserve, and producing cash flow from that exact same deal. He has reversed and flipped the benefit he was giving to the bank and now gives to himself.
Yeah, I totally get that.
Yeah. So you take that same idea, let's not say it's credit card, let's say that's another property. And let's say how many times we duplicate that and have all those cash flows that you're paying it to who? Because now I have built my cash reserves so that now I am truly my own banker. And I'm creating interest on my money in addition to paying myself interest. And the cash reserve growth is based on the stock market.
And the caveat is you're never losing any money.
Would you tell? Would you
with the
please tell the
IUL.
people? Would you please tell the people?
You're never
would you
losing
please-
money with the IUL,
Would you
right?
please tell the people? Okay, so let's talk about two things, right? The internal cost of the policy. Let's talk about that, because I can hear some of my naysayers say, "Well, he got a commission and he get a big commission." Yes, I get the Jabari. If you buy a policy for me, I'm gonna get a big commission. I am, right?
You should.
You know what? When the police show up at your house, because you called them, are they showing up volunteering or do they get paid to do that?
They get
They
paid.
paid to do that.
Yeah.
Fire department, if your house get called on fire, do they come? Is it volunteer?
There are no volunteers.
Thank you. Thank you.
Right.
Thank you. Thank you. And so this argument about earning a living, I'm not sure where that comes from, but that's how I earn a living, by solving people's financial problems.
Right.
Right? Because again, for every $100,000 of property you own, you are forfeiting $10,000 to $100,000 per year. And you are robbing your children and your children's children because they will feel it.
It's criminal.
It is, Bible straight out said, if you don't take care of your family, you're worse than an infidel. That's low. You can't even, that's lower than the dirt, right? But we have an opportunity. For those, can I put out a plug?
Absolutely.
Okay.
Yeah.
So if you're a group organization, real estate club, family club, we have something called, for our families, we do a group family meeting, and we have something called the private family banking system. We did a meeting a couple of Sundays ago, and just based on a group of 7 people, we identified that we could create about $1 million in cash reserves in 5 years with just those 7 family members, with the system that I'm talking about.
Wow.
Okay? Why? Because we're doing 2 things. One, we're reshifting the money that we're paying to the bank. We're going to get that money to ourselves. 2, we are working together. Now, everybody still has control over their assets, but they're going to work together when they do transactions. Do people know that Berry Gordy started Motown from a private family bank system? He went to his family and got a loan because they had a bank, they had a banking system, right? We use life insurance to do that. Why do we use life insurance? Because life insurance is the world's greatest financial instrument on the planet. It provides what? Arbitrage. It provides death benefit. It provides living benefits. Granddaddy gets sick, he doesn't die, but he's gonna be in the hospital for 6 months and he's gonna be out for another year and a half. The family gotta come together and pay for that. His life insurance policy, let's say it's worth $1 million. He can get $500,000 of that in cash to help him recover from cancer. That's why we use life insurance. Right?
You said that it's like, I think Albert Einstein said the interest is like the 8th wonder of the world.
Yes, it is.
And you talked about life insurance and that magnitude.
Yes, yes.
It's the greatest financial.
It is the greatest financial tool on the planet. Bank of America has over $25 billion. And those of you who have money in the bank, you need to go and pull up how much cash value that they have in assets. Because these banks are carrying billions of dollars in what? Cash value. How do they use it? Ooh, interesting. They use it for their business expenses. The same way what we're talking about right now, right? Mm-hmm. When you go in and finance the building of your next project, you should be using your policy to do that, right? The next time you go and buy another car, where you going to get the money from?
My insurance policy.
Your grand time
or somebody in my family banking system.
Oh, now
insurance
see,
policy. Maybe I take it, I get a loan from my son's insurance policy.
Oh, how about that?
And allow him to charge me 10%
How about
interest.
that? And then he's going to take that money and put it back where?
Back into his...
Back into the policy.
Yeah.
And that's how you do it. If we go back 5 years on a credit card that you've paid, if you can get one check from the credit cards that you've paid, how large would that check be?
It'd be huge.
It'd be huge.
Just when I think about 5 years and think about all the interest and fees that I paid over the course of, because we're always borrowing, right, to do something.
We are recycling and recapturing, but it's working against us.
Right.
Why? Because we're not the banker.
Yeah. Never know we could be. We never knew we could be.
So we are on a mission to change that. The average black family, for example, in Detroit, earns $40,000 a year. Okay? You know how much in credit card debt they got? If they took their credit card debt and replaced what they were paying towards credit cards to put into a life insurance policy, do you know how much Detroit would change? If we could take that and then evolve that into position ourselves, so when we go get a car, we use our insurance policy. Do you know how much that would change Detroit?
Well,
when Auntie Gigi passed away, and she leaves $1 million, and that $1 million goes into the trust, and the trust funds real estate with specific instructions based on what Auntie Gigi said, how does that change Detroit? See, we keep going to the government for everything we want. Stop.
Uh-oh.
The instructions is right there in the scriptures. Set your own family banking system, and you can solve every single problem that you got. Every single problem that you got.
Hey, Jeff, I'm just totally amazed, man. I'm embarrassed at myself that we haven't connected on a deeper level because we've been knowing each other for quite some time.
Yeah.
And I wish we had more time to discuss it.
Oh, we done?
To discuss
Wow,
more.
We've been talking for an hour.
Man, it just goes like that when
Man.
we're talking about these strategies.
Listen, I just want your community to call me. Let me come and do a seminar for your church, for your real estate group, for your real estate office, your broker office, your investor group. Listen, y'all need to call me.
Tell them how they get in touch with you. Tell the people, Jeff.
Okay, so we're going to put this out in the universe, huh?
Yeah.
Okay, so you can go to YouTube. You can find me on YouTube under Never Lose Money Strategy. You can find me. You can connect with me through that. You can connect with me through TikTok. I'm Never Lose Money Strategy. You connect with me on LinkedIn. Same thing. Never Lose Money Strategy. YouTube. I'm under Jeff Taylor. So you can go to any 4 of those instruments, or your emailers. You can email me at jefft@neverlosemoneystrategy.com. Neverlosemoneystrategy.com. jefft@neverlosemoneystrategy.com. Let me come and do a seminar for you. Okay.
Families, churches,
Real estate
block
group,
clubs,
block
real
clubs.
estate groups.
Yes. Investment groups.
Investment groups.
If you're a broker of an insurance agency, you're a broker of a real estate agency, you have a team of real estate investors you're working with, realtors, you need to call me. Let me show you how to sell your properties and teach people how to pay it off in as little as 7 years and see don't your production double. Follow my system.
Great information, Jeff. We're going to have you back on another show. I'm just in total amazement. I hope you all have gotten as much out of this show as I've gotten. And by all means, definitely reach out to Jeff. Jabari Long, The Long Report, wrapping up another show. Be sure to like, subscribe, and share this video. Y'all have a great day.